net investment in buy-to-let has slumped by 80% in 24 months following the introduction of a raft of harsher tax treatments and tougher lending standards. Stark figures from the Intermediary Mortgage-Lenders Association show net investment in buy-to-let property fell from £25 billion in 2015 to just £5 billion in 2017, a steeper drop than was seen immediately after the credit crunch in 2008. It means the vast majority of landlords have been selling off existing properties and not replacing them with alternatives at the same value, not expanding their portfolios, and/or have been paying down their mortgages. Davies, executive director at IMLA, said, "The raft of regulatory and tax changes that have hit the buy-to-let market recently have far-reaching effects that are still yet to be fully realized." But the private rented sector plays a vital role in our housing supply, and it's essential that a sensible balance is struck if tenants are not to be disadvantaged by shrinking stock and higher rents. The report estimates that between 2000 and 2017, UK buy-to-let landlords invested £289 billion into the sector, bringing 1.8 million properties into the rental market. At the same time, real rents have fallen 4.4% across the UK. However, IMLA reports that new tax and regulatory measures introduced in the past 2 years, including the 3% stamp duty surcharge and the removal of mortgage interest tax relief, have deterred some landlords from expanding their portfolios and prompted others to exit the market. According to the trade body, as a result of tax changes, a fifth of landlords have indicated that they plan to reduce the size of their portfolios. Davies said, "We know that the majority of people regard owner-occupation as the tenure of choice, but for many this is not an immediate option." We also know that those who would in the past have rented from their local authority or housing association now need to rent privately. There are currently 4.5 million people relying on privately rented housing in England alone. Should demand for rental property continue to increase at current rates, driven by a lack of social housing supply and inaccessibility to owner-occupation, IMLA's report suggests that this will lead to upward pressure on rents, disadvantaging tenants in the sector. We urge the government to reassess the impact of the recent far-reaching regulatory changes to buy-to-let investment and allow a period of policy consolidation, added Davies. Our nation's buy-to-let investors provide a service that's vital to millions of UK tenants. We need to support and protect a sector that does so much for so many. Separate data published today by UK Finance revealed that landlords are also falling behind on their mortgage payments. There were 5,100 buy-to-let mortgages in arrears of 2.5% or more of the outstanding balance in the fourth quarter of 2017, 2% more than in the same quarter of the previous year. Within the total, there were 1,200 buy-to-let mortgages with more significant arrears representing 10% or more of the outstanding mortgage balance. This was 20% greater than in the same quarter of the previous year. Paul Smee, head of mortgages at UK Finance, said the figures were likely down to the recent tax and regulatory changes, which he said have softened the buy-to-let market. He added, any percentage fluctuation in the monthly data should be interpreted with caution as the absolute numbers remain very small. Alistair McKee, of mortgage broker 177 Mortgages, said the figures reflected high debt levels for some landlords who may have found it harder to remortgage over the past year as a result of tougher lending standards imposed by the Bank of England. He added, landlords have faced tightening criteria, worsening tax treatment and typically have tighter margins. Those with buy-to-let mortgages don't have the same wiggle room because low interest rates don't afford them the same opportunity to create extra headroom in tricky times.